I'm Tyler Kendall here at the CFTC, and I'm joined now by the Chair and CEO of the Intercontinental Exchange, Jeff Sprecher. Mr. Sprecher, thank you so much for joining us here on Bloomberg. And you were there at the White House yesterday. I saw you there with President Trump for this event where he was really trying to push for the passage of the Clarity Act. I'm wondering if you can outline for me, what would passage of Clarity unlock for you?
Well, one of two things. It would obviously provide legal certainty for areas that are now somewhat undefined. But notwithstanding what the Congress is doing, we have been moving forward to try to tokenize the New York Stock Exchange, to try to extend its hours, to try to change its pricing model under conventional laws so that we have a parallel track going on in order to move our business forward.
Can you give us updates on those tokenization efforts?
It's with the SEC right now, and it's making progress. This particular SEC wants to not stifle innovation. It's got a more challenging rule set to deal with without the Clarity Act, but notwithstanding, there is a process there for innovation exemptions.
The other side of this remit, of course, is prediction markets. I found this quote from you. You've described prediction markets as having real economic utility. Do you see ICE eventually listing its own event contracts, or is this purely about that data layer, owning that, like with Polymarket, and then letting those platforms do the prediction markets?
A bit of both. We've long had markets where you're asking market participants, where do you think an index will settle, which in a way is a prediction market. Historically, those have been very obvious indexes that define an industry. What the prediction markets have done is really drill down on very, very minor, minute, localized ideas, and I think that works better for those people because it's just a constant listing and delisting of contracts, which is really not how my universe, Wall Street, operates. Can
you give us an update on your relationship with Polymarket and just how it's going?
Sure, we have a great relationship. We are an investor in it, and we partly invested in it because we were interested in their technology. They are truly a blockchain-based system, and we were hoping for technology transfer, which they've been helping us with. And at the same time, they had regulatory issues. They really needed to get to compliance in the United States, and we're long versed in how to do that. And so there's been this mutual transfer of information. We're not a venture capital firm. We put money into it simply so that we had connectivity with them. And in that regard, the investment itself has done well, but it's really this underlying exchange of information that we are working on.
Okay, so that might answer my next question, because Polymarket is looking to raise capital at a $20 billion valuation. So I was wondering if you were going to add to your stake or keep it capped at, I think, $1.6 billion.
Yes, we're in at $1.6 billion. We'll look at it. If it will help the round in order to have our imprimatur on it, we always are interested. We've done 2 rounds with them, but the reality is we're not a venture firm. We're really here to have this transfer of information and expertise.
I did want to ask you, because you're looking at creating a futures market when it comes to AI compute power. Why do you think that this is the right financial tool for lenders or these tech companies in the AI space to hedge against their costs?
It's a good question. First of all, the CFTC is going to do a broad, information gathering about that very question to see where the whole industry is, which will be interesting. We are the world's electricity market. I actually started the company to be an electricity exchange, so it's in our DNA. And if you think about compute, today it's electricity and possibly chips on the input, and then on the output, these things called tokens, which is basically the way you pay for compute. And so somewhere in that amalgamation, I suspect is going to be trading and risk transfer, whether it's buying the inputs to the power plant and data center, or whether it's buying the output, how the models work, I think is something that we'll discover with this inquiry.
Well, the CFTC chair just told me that he seemed rather excited about this idea. So I'm curious, have you gotten any indication when it comes to the timeline for this? Have you had to push back a timeline? When are you planning to if you get that regulatory approval to move forward.
Yeah, we've announced that we intend to do this at the same time the CFTC has announced that they want to do this survey. And so we think they're going to be relatively efficient and quick. And it will nest with the timeline that we will have for launching. But we're also interested to see what the market thinks about these ideas. Will the hyperscalers want to hedge? Or that's not historically where they go. We've seen some of the hyperscalers and foundation model people are starting to advertise for trading to get personnel in there. So it does feel like there's something to this, but I think we'll know within the next maybe 90 or 120 days.
Well, I was going to ask, what type of clients have expressed the most interest in this?
It's everyday people, honestly. It's
really?
all about, like, my company is had a zero budget for tokens for 2026, and now we're a big shop with most of the foundation models operating. Our costs are going up. We're trying to figure out what's the return on investment. And every CEO I talk to, and we talk to a lot of them because of the New York Stock Exchange, is going through this process of am I going to use one of these big foundation models? Am I going to use an open source model or open weight model? Which cloud am I going to be in? So those are all issues that business is wrestling with right now, and we're wondering, is there a way that we can help them by having a risk transfer through hedging?
If I try to streamline this to news of the day, and we talk a lot about the AI build out in Washington, we also talk a lot about the conflict in Iran. And whenever there's updates, the markets are just watching it so closely, because when news breaks over the weekend, or any events related to the energy markets, there is notable trading in these offshore platforms when it comes to 24/7 oil futures. What is your level of concern with these products, and are you seeing any direct impact?
We're watching it closely. Maybe that's the political way to say it. The energy industry itself is not set up to trade on weekends. The banking system is closed.
Yeah.
And so if there is a high price spike up or down, there just isn't the infrastructure right there to manage the risk on the weekends. So let's call it institutional money is not there yet for 24/7, 365. That said, part of what's going on underneath this is this movement towards blockchain, which is really just a rewiring of a banking system. It's really just the ability to move money on the internet 24/7, 365. And I do think that that's either going to urge the banks and the Fed to open the Fed funds wire and keep it open around the clock, or we're going to have alternative rails through blockchain. One of those two will happen, and when that happens, then I think you'll see 24/7, 365. It's in that vein that we want to extend the hours of the New York Stock Exchange, tokenize the settlement of the New York Stock Exchange. It's not so much about the stocks as it is about, can we get capital movement underneath, because you have to spend money to buy the stock.
So are you seeing demand for 24/7 futures just more generally?
We definitely see these things called perpetual futures, and and they started actually around energy, but they've moved quickly into equities, and so it does feel like that's a 24/7, 365 equity movement.
Yeah.
There's a lot of pre-IPO trading. There's a lot of trading of the big notable tech names. People in Asia and other jurisdictions want access to these U.S. stocks. The good news is the United States dominates tech. And so in order to serve that clientele, you're going to have to be open when a lot of Americans are in bed.
So are you considering offering perpetual futures on ICE's own exchanges?
Not necessarily. Our client base is really a hedging client base, and there's no forward pricing curve that is created by a perpetual future. It's really a speculative. One person thinks it's going to go up, and the other one thinks it's going to go down, and so you have a red-black bet. And obviously there's a lot of interest in that, but it doesn't cater to our distribution or client base. So we know the people that are doing this. Obviously, you mentioned Polymarket is working that direction, and I think we'll probably partner with people or help other people who have distribution that we don't have.
In the final minute I have you recently announced your acquisition of Market Access, which added on new institutional bond investors, but I'm just wondering more broadly what your appetite is right now when it comes to M&A.
So you mentioned, like, I've invested in new technology, blockchain technology, perpetual futures, all kinds of things. And one of the things that new technology is doing is it's driven down valuations in traditional financing. And MarketAxess was at one point a $12 billion listed company. Its value went down to 4. And I just saw that there was value there. Like I think sometimes the shiny object leaves things behind, and so it just felt like a right opportunity to take control of a really important company at a very, very, very reasonable valuation.
But are there any other parts of the U.S. market or even abroad that you're not in but may be interested in?
We're always looking. I mean, I built the company. I've probably done somewhere between 30 and 50 exchange deals to create Intercontinental Exchange. So we're always looking. It's in our DNA. But it's got to meet the right investment criteria. And interestingly, it's sort of both ends of the barbell that you see us investing. Sort of scratch and dent traditional finance and shiny object blockchain finance.
All right, Jeff Sprecher. Mr. Sprecher, thank you so much for joining us here on Bloomberg Television and Radio.
Thank you.